Welcome to this explainer. Look, if you run a brick and mortar shop, you've probably thought about slapping some security shutters on your storefront, right? But the way those physical upgrades actually affect your commercial property insurance is, well, wildly misunderstood. Today, we're cutting through the noise. We're going to break down exactly what insurance carriers actually care about, relying on some real-world insights from the folks at Affordable Security Shutters, who handle storefront protection across Northern California literally every single day. Let's get right into it. Okay, let's kick things off with a marketing promise you've probably seen 100 times on security ads. Save up to 15% on insurance. Sounds like a no-brainer, doesn't it? Well, here's the reality check. The team at Affordable Security Shutters actually went hunting for the documented industry source of this magical 15% figure, and guess what? They found absolutely nothing. Not a thing. It's a classic hollow marketing hook. How insurance carriers truly handle physical security upgrades is way more nuanced and, honestly, a lot more interesting. To really get what's going on, we have to pull back the curtain and look at how carriers actually underwrite a policy. Spoiler alert, they do not just see a shiny new shutter and slam a big red discount button. It doesn't work like that. They evaluate your properties systematically. Basically, they're running through a very specific set of questions to calculate your exact risk profile. Think of it like a giant puzzle. So here's the exact math the underwriter is doing. Number one, can someone break in? They're looking at your glass, your doors, your access control. Obviously, having rated shutters on street-facing windows paired with a monitored alarm scores huge points here. Number two, what happens if they do get in? I mean, a jewelry store has a drastically different maximum loss exposure than a local liquor store, right? The carrier multiplies the probability of a break-in by the magnitude of the potential loss. Shutters hit both of those. They reduce the chance of entry and slow down how much inventory they can grab. But question three is the real kicker. What is your claim history? Because physical security simply cannot erase your past. If you've had break-ins before, or you're located in a high-risk zip code, that history is baked into their math no matter what you install today. Now, here is the absolute most crucial pivot for this entire explainer. We really need to drill down into the massive difference between scoring a simple premium discount and maintaining a strict policy warranty. A lot of operators think adding security is just a neat little trick to lower their monthly bill. But for many businesses, especially right now, this isn't about saving a few bucks. It's fundamentally about business survival. It's about making absolutely sure your policy actually pays out when disaster strikes or keeping your coverage from being dropped altogether. Let's define this clearly because the legalese really matters here. A warranty clause is essentially a mandatory condition just to keep your coverage valid. The insurer isn't patting you on the back and rewarding you with a discount. They are literally mandating specific physical security measures as a condition of the policy itself. If you ignore these mandated procedures and someone breaks in, the carrier doesn't just bump up your premium for the next year. No, they can completely deny your claim. They can legally refuse to hand over a single cent.
And this perfectly highlights why in certain industries, installing security isn't some cost-saving hack. It's legally about not losing the safety net you already have. Take jeweler's block insurance, for example. According to the American Gem Society, a jeweler might be strictly required to use a specific type of safe or follow exact step-by-step closing procedures. Skip a step, claim denied. Or look at cannabis dispensaries. Under the California Code of Regulations, Title 4, Division 19, the Department of Cannabis Control actually sets physical security minimums as a condition to even hold a license. If a dispensary lets their mandated surveillance or access controls slip, they can lose their state license entirely. And an operator without a license, yeah, they become effectively uninsurable overnight.
So back to that 15% myth. If the big discount isn't real, what has actually happened to your bill? Well, even if you aren't tied down by a strict warranty clause, installing shutters might not lower your top-line premium. What business owners actually see at renewal time varies wildly depending on the carrier, the zip code, and the type of business. Sure, some get a nice discount, but a lot of folks report their price stays exactly the same, but they get much better coverage terms instead. We're talking higher liability limits, significantly lower deductibles, or getting rid of nasty policy exclusions. Both of these outcomes are massive wins for your business. It's just that only one of them looks like a traditional discount on your invoice. Here's your game plan. The absolute most honest answer to how much will I save is to go ask your broker directly. Do not guess. Tell them exactly what you're planning. Say, rated security shutters across all street-facing openings, and ask them point blank, will this change my coverage terms or my premium? And this is absolutely crucial. Get a conditional statement from your broker in writing before your licensed contractor touches a single tool. They probably won't promise a hard dollar amount because underwriters make that call, not brokers. But you absolutely want an email on file stating that if the install meets specs, the underwriter will officially factor it in at renewal. Let's talk about why this is so incredibly urgent, especially if you're in the California commercial property insurance market. Over 2024 and 2025, California got hit with a massive, brutal wave of non-renewals. We're talking a perfect storm of wildfire exposure, skyrocketing claim costs, and carriers just losing their appetite for risk. Olympic Insurance Agency even called out a significant spike in non-renewal notices for commercial properties. This completely flips the script. We are no longer just optimizing for a better rate. For a lot of owners, it's a desperate scramble to simply stay insured at all. Procedurally, how does getting dropped actually work? Well, there are rules. By law, under California Insurance Code Section 678.1, insurers have to give you 60 to 120 days of written notice before they boot you, and they must state a legitimate underwriting reason for doing so. If they mess up and don't give you timely notice, your policy just rolls over without a change. So, yes, you get a bit of a buffer. But make no mistake, this law does absolutely nothing to stop the non-renewal from happening if their underlying reason is legally valid. Now, you might be thinking, didn't California just pass new laws to protect businesses? Sort of. You've got Senate Bill 547, the Business Insurance Protection Act, kicking in January 1, 2026. This officially prohibits carriers from non-renewing commercial property policies in declared wildfire emergency zones for 1 full year after the declaration. It's a very real protection. But look closely at the fine print. It is incredibly narrow. It does absolutely zilch to protect you if your non-renewal is triggered by break-in claims, a pattern of vandalism, or just your general loss history. So what happens if you do get dropped? If standard carriers refuse to cover you because they think your risk isn't managed, you could get shoved into the excess and surplus lines market, the E&S market. This is basically the insurer of last resort. Let me tell you, finding replacement coverage in the E&S market is astronomically expensive and usually packed with terrible exclusions. Because of that, the real savings of installing physical security today isn't some magical discount. It's simply proving you're actively managing your risk so you can stay cozy in the standard market with your current carrier. All right, let's say you pulled the trigger. The shutters are up. How do you actually ensure the carrier recognizes your investment? You need a rock-solid, proactive plan for the exact day your installation wraps up. And a quick reality check here. Carriers almost universally require this work to be done by a licensed commercial security contractor. A DIY job, no matter how many YouTube videos you binged, isn't going to cut it for the underwriter. They need an official contractor's license number and proper specs, not a hardware store receipt for some screws and a hammer. Let's break down your immediate day-after install checklist. First, email your broker the installation docs the second the job is done. Send over the date, the product family, the specific openings covered, and the rating specs. Do not wait around for your renewal date. Most carriers aren't going to kindly ask if you've made upgrades. You have to put the paperwork right in front of them. Second, in that very same email, explicitly ask if this installation changes your coverage terms or premium. That simple question gives you crucial leverage before the renewal cycle even begins. And finally, save, print, and archive that entire email exchange. Creating that documented paper trail is pure gold. It proves you are actively managing your risk. If your policy ever goes up for a tight review, that exact paper trail could literally be the difference between getting renewed and getting completely dropped. So let me leave you with this to chew on. If a break-in happened at your business tonight, would your carrier reward you for the security you have in place, or would they use it as an excuse to drop your coverage entirely? Are you assuming a discount is coming, or do you know for a fact you're meeting your policy's strict warranty clauses? It's a heavy question, but understanding the hidden mechanics of your policy really is the only way to protect your storefront and ultimately your livelihood. Thanks so much for hanging out with me for this explainer. Now seriously, go check your policy terms.